This is Keith Gill, better known by his YouTube name, Roaring Kitty. He has shades on, his arm in a sling, and bandages all over his face, and yet he is single-handedly responsible for breaking the stock market. Twice. He exploded Gamestop's stock to absurd heights, all while costing hedge funds and Wall Street billions of dollars, just by posting a few pictures online. So how'd he do it? Well, let's talk about it. Keith Gill, aka Roaring Kitty, or Deep Effing Value on Reddit, is an online financial analyst and investor who started to gain some traction back in 2019, primarily for his posts on the subreddit Wall Street Bets. In September of 2019, Keith invested around $50,000 into Gamestop, a video game retailer that had been struggling for years, with steadily declining revenues. But Keith believed the stock had major unrealized value, and posted his position on the Wall Street Bets subreddit. However, Keith was met with large criticism at the time, as many people believed his decision was foolish, and it was quickly dubbed a YOLO investment. But Keith took all the hate very well, making lighthearted jokes and provided thoughtful discussion and due diligence about why he thought it was the right move. Keith would continue posting updates about his position each month on Reddit, buying more and more shares to further solidify his belief in the stock. The first few months of 2020 were up and down for GameStop, thanks in part to COVID-19 plummeting the stock market. So Keith went into July of 2020 down $30,000 on his original investment. But that's when Keith decided to start his YouTube channel, Roaring Kitty. Keith's first few videos on his channel were a brief overview of his unique and fun approach to investing.
So I just draw a card, keep it real easy, and we'll just say 6. Okay, so I'm going to be buying 6,000 shares of PEN, right?
He then made a video on his GameStop thesis and why he believed it was an overlooked and valuable stock to buy. Many news and financial outlets had labeled GameStop a doomed business, as the world transitioned more and more into a digital and online economy. There was a lot of negative sentiment surrounding physical discs when compared to buying games digitally, and most people felt that GameStop would be totally obsolete within a few years. Because of this, GameStop became one of the most shorted stocks by Wall Street and major hedge funds. But Keith's viewpoint was a little different. He felt the negative sentiment and risks in the stock were overblown, and this opinion was hiding the true value of the stock. Physical discs remained a solid chunk of the video game market in 2020, and there were still some perks of owning a copy rather than just a downloadable version of the game. Things like extra storage space, better download speeds, trade value, and shareability were key benefits that a lot of people still valued. Couple that with an overhaul of the company's management team and board of directors, as well as many great refinancing decisions that cut costs, and the health of the company looked much better than its stock price indicated. Keith began live streaming his daily routine of tracking stocks and researching to help educate his viewers that were new to investing. He continued to update his community on his GameStop position and convinced many people from both his live streams and Wall Street Bets to join him in investing in the company. But the first major upswing for GameStop happened in August of 2020. Famous billionaire Ryan Cohen, founder of the online pet food retailer Chewy, and a notoriously successful investor, bought 9 million shares of the stock, which was roughly 13% of the company at the time. This decision changed a lot of the sentiment surrounding GameStop and Roaring Kitty's once lucrative investment. And as such, more and more people from the subreddit began to invest in the company. And once people found out about the short positions that Wall Street and major hedge funds held, they realized they could short squeeze the quote, smart money investors and screw them over. By January of 2021, GameStop stock increased from less than $1 per share to a pre-market value of over $500, a 500x return on investment. Keith's original $50,000 portfolio had skyrocketed to a value of $48 million. He had proved all his doubters wrong in what was the biggest single-day stock spike in the market's history. However, the fallout from the spike was immediate, as multiple investment brokers like Vanguard, JP Morgan, and most notably Robinhood, began restricting purchases of the stock to protect the hedge funds from losing money and avoiding bankruptcy. The blatant corruption that's existed in the stock market was openly revealed to the public and sparked a lot of outrage. The stock price plummeted, and Roaring Kitty lost $13 million in just 24 hours. But people struck back once more by going all in into GameStop again, keeping the price around $30 to $50 per share for the rest of the year. By the time the hype faded, major hedge funds that had shorted GameStop lost billions of dollars, and many were forced to close down or get bailed out by the government to remain afloat. Keith's portfolio would bounce up and down from $45 million to $17 million until April 16th, where he'd put out his final update on Wall Street Bets, with a total investment value of $34 million. And throughout the entire time, he never sold a single fucking share, earning him the nickname Diamond Hands. Because of the crazy spike of GameStop, Keith Gill was met with a lawsuit alleging he had committed fraud and misled investors for profit. Keith was forced to give a testimony in front of the U.S. House Committee for his role in the volatility of GameStop stock, where he gave his now infamous speech.
A few things I am not. I am not a cat. I am not an institutional investor, nor am I a hedge fund. As for me, I like the stock.
Keith Gill was just a guy that decided to invest in GameStop and wanted to share his journey with the stock online. And in only a year and a half, he unintentionally started one of the most lucrative stock explosions that's ever occurred. He was the face of a retail trading movement to take down hedge funds in Wall Street, while simultaneously making himself and his followers hundreds of millions of dollars. Keith's impact on the stock market was so large that Hollywood put out a movie about the whole situation titled Dumb Money, which detailed the entire events of the GameStop stock.
Yo, what up, everybody? Roaring Kitty here. I'm gonna pick a stock and talk about why I think it's interesting, and that stock is GameStop.
And it didn't stop with just GameStop. People in the Wall Street Bets subreddit discovered that AMC was another company that was shorted by many large hedge funds. So the stock surged from just $9 in January to a peak of $500 in June. And while AMC and GameStop have since come down in value, the duo would be given meme stock status thanks to their insane stock volatility and overvaluation. But as quickly as Keith arrived, he would vanish from the internet just as fast in April 2021, never to be heard from again. That is, until May 12th of 2024, 3 years later. All Keith did was post the sit up in your chair meme on his account, with no words or caption. And this is what happened. Both GameStop and AMC stock prices tripled in 24 hours. GameStop went from a $3 billion company to a $9 billion company overnight, all because of one guy posting a meme on Twitter. Even AMC, which keep in mind Keith has never posted about or mentioned even once, gained $2 billion in value overnight because of this picture. No one in the history of the world has ever had the power to swing the market that easily. Not even the corrupt politicians who make their money from insider trading. It took one picture for everyone to explode and dump all their money into GameStop and AMC. Keith then posted his new GameStop position on Reddit a few weeks later, showing his fans he now had a portfolio of over $175 million worth of call options, which is almost 5% of the entire company. Keith would continue to post memes on his Twitter account before scheduling his first live stream in 3 years, taking place on June 7th. GameStop would once again double in value in anticipation for the live stream, and Keith's portfolio temporarily reached $1 billion in value. But once it started, it was clear that Keith wasn't taking anything seriously. He was wearing bandages, shades, and a sling and pretended to be dead for the first few minutes of the live stream. After that, he contemplated with his chat whether a magic 8-ball is good financial advice.
Will we end green? All right, that's one. Will Celtics win? That's a great one.
More than 800,000 people tuned into this live stream live, including news outlets like CNBC and CNN, and probably all of Wall Street, the SEC, and the FBI just waiting for him to slip up. And Keith sat there and trolled them all. Keith knew that the media would try and accuse him of rigging the markets. So he watched live as the stock price tanked 40% in one day, and he did it with a smile on his face. Keith was losing hundreds of millions of dollars, and once again, he didn't sell one single share. Keith Gill isn't a hero, or the head of a movement hell-bent on destroying the corrupt financial system. He's just a guy who liked the stock. And that stock happened to be GameStop, a company on the verge of bankruptcy with declining revenues and a lot of negative sentiment from the media. And so he put some money into it and decided to let people tag along for the journey. His YOLO investment went from being laughed at to one of the most influential financial decisions ever made, breaking the stock market not once, but twice. He's made hundreds of millions of dollars on one stock, and the government can't do anything about it. Now that, my friends, is some deep fucking value.